Hey Cryptoverse, it's Big Sky here, and in this video, I'm going to give you an introduction to cryptocurrency. And my guess is, no matter how long you've been in the market, you're going to learn something in this presentation. So without further ado, let's get started. So, what is cryptocurrency? I was told there would be Lambos, but in all seriousness, it is a digital currency and it's actually a global phenomenon. It acts as a medium of exchange and a store of value because it has value. It's a distributed ledger, cryptographically secure payments. It's self-governed insofar as it protects against double spending. And it's highly divisible. It can be purchased in fractions. Everyone always says, it's too bad I didn't get into Bitcoin earlier because it's so expensive now. But the fact of the matter is that you can buy as little as $10 of Bitcoin or other cryptocurrency. So the history of cryptocurrency. Hey, aren't you the guy who created Bitcoin? No. So a funny story about this guy is his name is actually Dorian Nakamoto, and he lived down the road from the person that got the first transaction from Satoshi Nakamoto. But nonetheless, he denies any resemblance to the cryptocurrency. So the history of cryptocurrency, it all started back in the 1980s with cypherpunk, which was an activist group. This led to many creations such as DigiCash in 1983 by Chom, Ashcash in 1997 by Adam Back, Micropayments in 2000 by Shirky, and B-Money in 2002 by Zabo. Bitcoin. When you realize Bitcoin isn't just about making money, it's about replacing money. Oh. So Bitcoin was created in 2009 by Satoshi Nakamoto, and it was a libertarian response to the big banks' inability to solve the financial crisis of 2008. It is scarce insofar as there's only 21 million coins in existence, so it has intrinsic value insofar as it is limited in supply. It is an open source network that is run by peers, so there's no central authority. It's quasi-anonymous insofar as it runs on public and private key technology. And it allows for the decentralized clearance of payments in a technology known as blockchain. So what is blockchain? Say blockchain one more time. Everyone thinks blockchain is this technology that Bitcoin runs on. And in one aspect, they're correct, but blockchain is actually made up of three different technologies. In and of itself, it's a digital database, which is basically a publicly accessible ledger. However, the first piece of technology that it runs on is a peer-to-peer network, which basically states, as I did before, that there is no central authority. It also runs on asymmetric cryptography. That's the public and private key technology. This allows the network to be verified and secure with regard to the information that is stored within it. The last technology that it runs on is called cryptographic hashing, which is basically unique data fingerprints. It allows for the canonical order of the blockchain so that there's no double spending. The whole network knows where every dollar is at every second. This allows the network to be synchronistic. Blockchain adoption. Blockchain without Bitcoin, ha 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 ha. But in all reality, it has been adopted by the world. It's been used in data storage management in order to access policies and references of users. It's also used as data storage contracts and in document storage contracts. Blockchain has also been used in trades of goods and services, such as purchasing an asset. Blockchain has also been used in identity management to verify PGP certificates and to manage updates, registrations, and revocation of keys. Finally, blockchain has also been used in rating systems to track social voting systems and customer feedback. So next we're going to talk about cryptocurrency mining. Bitcoiners be like, I'm in it for the technology. So, what is cryptocurrency mining? Essentially, it involves computer processing power that's used to solve complex algorithms. It's basically a competition between miners to add new transactions to the blockchain. It's an incentivized phenomenon insofar as miners receive transaction fees. It's computationally demanding insofar as it runs on a memory-intensive hashing algorithm. And there's also a mining difficulty which increases over time. So when Bitcoin first came out in 2009, for every new block that was added to the blockchain, 50 new Bitcoin were distributed to the miners. 4 years later, the mining difficulty increased such that instead of getting 50 Bitcoin per every block, they actually got 25. The next halving is going to go down to 12.5 and then down and down and down every 4 years. So there's two kinds of mining. There's proof of work and proof of stake. What if I told you Bitcoin mining uses more electricity than 139 countries? So proof of work, yes, it is a spam deterring signal. It carries a strong economic signal without relying upon trust. It's costly to produce but trivial to verify, and therefore deters double spending. Proof of stake, it basically is less energy intensive and it actually turns an investment into value. So in order to mine with proof of stake, you just have to prove that you hold X amount of tokens, and then you will be able to mine for new tokens and to verify the blockchain. This brings us to Ethereum. When she finds out you mined Ethereum in 2016, oh boy. So basically, Ethereum facilitates transactions despite spatial displacement, difficulty interfacing, and incompatibilities between governments. It's a global messaging framework that allows for decentralized applications to be built on its blockchain. Ethereum can be considered a virtual machine insofar as it can be considered a shared ownerless computer that can execute smart contracts and runs on Turing complete language. This allowed for the expansion of the cryptocurrency markets to include altcoins. And a little tip, guys, you can't choose the wrong altcoin if you invest in all of them. That's going to be a little difficult, though, in all reality, because there are over 5,000 types currently. They do act as a medium of exchange, just like Bitcoin. And they do run off of speculation. That's one thing that makes altcoins very appealing to investors and risk takers, because everyone's always looking for the next Bitcoin. They're inexpensive. They're used for inexpensive cross-border transfers, such as XRP, which is a cryptocurrency that is proposed for the banking system. And altcoins are also self-organized. They have self-organized applications. Some of them can serve as a security token, while others have actual utility. So why would you invest in cryptocurrency? Well, because of the open source nature of cryptocurrency, it allows for the verification of codes and to implement change. It's decentralized, so no single entity is an authority within the network. It has the peer-to-peer protocol, which eliminates this central authority, and it's global, meaning that it's borderless, and it has universally accepted exchange rates. So what are the internal factors that drive cryptocurrency? Transaction costs. If transaction costs are too high, then the network usability will be lower. The reward system, as the rewards, people want to be rewarded. People want to earn money. That's the nature of economic markets. But as the reward system gets cut in half, that means that whatever cryptocurrency you're talking about, let's say Bitcoin, becomes more scarce over time. Mining difficulty. So as more and more computers are added to the network, and they're actually increasing the hash rate of the network because they're all trying to mine for blocks, the mining difficulty actually goes up to compensate for this, because when Satoshi Nakamoto first made Bitcoin, he wanted blocks to be made every 10 minutes. So as you have more and more computers that are adding hashing algorithms to the network, the mining difficulty actually adjusts for this. And the circulating coins. If you only ever have 21 million Bitcoin in existence, then that's going to be a factor that drives the price of it. And forks. So whenever there is a disagreement within the community between the developers and the community in and of itself, it usually results in forks, which is just basically differences in the way that the coin operates. What are the external factors that drive cryptocurrency? This guy on his cell phone, he panic sold, pump it. In all reality, though, it's popularity. So the more popular that the cryptocurrency market is going to get, the higher the prices are going to go. Market trends. So as bull markets roll in, cryptocurrencies are likely to go up. They actually do have some resemblance to the traditional markets, because right now, with the coronavirus that is going rampant across the world, you can see that all markets are affected simultaneously. Macro finance. So again, you can look at correlates with gold, things like this. Traditional markets, again, you can look at correlations with the NASDAQ. You can look at correlations with the Dow Jones. You can look at other correlations, silver, gold. Exchange rates. So as exchange rates between countries or in a country varies, it makes it very hard for these countries to trade with each other. But if you just had, if you were to use Bitcoin and you just had one standardized exchange rate, that is a factor that is going to influence it. Again, we talked of gold. Gold is considered a safe haven asset where people find trust in uncertain times, such as war or pandemics. And interest rates. So right now in the World Forum, interest rates are being cut to near zero, and there's actually speculation that they could go to negative, meaning that if you had money in a bank, you would actually have to pay to have them store that money for you. So Bitcoin is a nice alternative. Ethereum is a nice alternative insofar as it gives you interest over time, or you can make your money work for you. And political factors, again, with unrest in the world, we have you could have disagreements between countries. You could have sanctions put on a country, so maybe they would want to use cryptocurrency to get around those sanctions. And that is pretty much it, guys. I hope you enjoyed. Please let me know what you think. I hope you learned something new. If you did, put it in the comments section. Like, subscribe, smash the bell, and even donate if you want. Until the next one, have a good one, guys. Peace out.